Good afternoon and welcome to Bull Market Stock Show. This is your host, Rian Hobson, and we're doing today the Kiwi and the Aussie dollar, which look actually in remarkable shape, especially with the news this morning out of New Zealand, where they come with the inflation statistics that came out, and that actually lifted up the case for the Reserve Bank of New Zealand to act. And it looked like the probability is now sitting on 90% that the Reserve Bank of New Zealand will raise the interest rate. Now, please do subscribe for my YouTube page and please leave your comments and so that I can answer them while I'm live. Now, back to the show. The New Zealand dollar had actually quite a robust inflation data that came through this morning. Inflation month was up by 1.3% versus actually a 0.7%. That is now quarter over quarter inflation that actually came out at 1.3%, and year on year surpassed a 2% inflation objective, and it's actually above 3%. Well, the Reserve Bank of New Zealand did notice this, and that's why they actually put the stimulus on hold. And also at the same time, now it looks like they're gonna lift up the interest rates. Now, if you look at the New Zealand dollar, the only thing is with New Zealand dollar is that stiff resistance that is actually a bit of a problem. As we all know, that level of 0.72 against the US dollar is the heavy resistance that has been there since April 2021, and it's been sitting there and it just can't break that heavy resistance. Now, this comes off the back of the Federal Reserve that was very dovish yesterday and keep the stance that they still have a lot of progress to show. So the Federal Reserve is being very dovish, but it's funny enough that the dollar index is quite resilient with this. And also later on the news, later in the day, there's news that comes through out of the United States, and that is the core retail sales and retail sales that come up. And those numbers is being forecast, you just need to scroll, it's been forecast at core retail sales at 0.4%. And then we have a negative 0.4% month over month for core retail sales at negative 0.4%, core retail sales at 0.4%. That is month over month. Now, it could be that this statistic might, I would say the actual number could be a bit higher. That is just my opinion, because I looked at the credit, the consumer credit in the United States for last month. It was actually quite high, and that could actually possibility that it could actually bring up the retail sales a bit higher than what was forecast. That is just what I think. So I would say the best thing is, before you jump in and buy Kiwi and the Aussie, please wait for the retail sales to come out, because I think there's a possibility that news, that the actual news that come out might actually be better of what was forecast. But the main thing is, what we need to look at is actually the Aussie dollar and Australia. Now, the Aussie dollar in Australia is very highly dependent on the commodities, especially Australia. Australia is sending a lot of iron ore to China and actually export in general a lot of raw material. Also, New Zealand, the same, especially the dairy products, wood and those type of things, they actually export quite a lot. So that's why they are known as your commodity currencies. Now, a lot of traders do trade the Australian dollar and the New Zealand dollar together. Me, on the other side, I don't like that. I would rather take them with the dollar or against the Japanese yen, but they are actually my favorite currencies. Now, to stick to commodities, the US oil inventories actually came out also this week with a heavy drawdown of negative, I think about 7.3 million barrels that were a shortfall in the inventories. And that in the forecast was about negative 4.3 million. So I'm actually a bit surprised why the oil prices didn't go up. It did slightly jump, but not so aggressively as what I anticipated. I thought I would get a heavier jump. But that news plays in that oil is still a problem, and there's still a shortage of oil in the United States, and that could translate to a higher oil price as OPEC and all these members and the UAE is no longer have this discussion of going alone and all of those things. So I think that talks do simmer down. But it has an influence on the New Zealand dollar, as we know that once oil prices go up, then you have inflation in other commodities that also do go up. So normally commodities go in one direction, and that also lift up the New Zealand and Australian dollar. Just to check on the chart for New Zealand and the Australian dollar, as I said earlier, they are just been battling with actually that stiff resistance that has been there now since April. And I'm just actually going to share my screen. Let me take this one. Now, if you look here, that stiff 0.72 mark there and a bit slight higher, it's been going there and coming down since the beginning of this year. And if I look here, it went up by April, it was sitting there, and then it just gets stuck. And I think with a dovish Federal Reserve, and the possibility that oil prices will go up and have actually the potential also to lift up other commodities, and also other countries across the world, especially your first world countries, that is still very dovish. On top of that, you have the People's Bank of China that is also a dovish, which is a very important trading partner with New Zealand and Australia. They are also actually dovish, and I think with all that weight, we could see that the New Zealand dollar go over this heavy resistance. There's quite a lot of fundamentals that do play in the part of New Zealand, and on top of that, the possibility of them raising the interest rates. Now, very importantly, normally the currencies move because of the high probability that New Zealand may lift up interest rates. Currencies normally move before actually the interest rates announcement. And I think because of all the weight, the stimulus that's going to hold, the possibility of a rate hike, I do think, and the People's Bank that's basically stimulating the economy, dropping interest rates, the USA that is being dovish, all of those factors do play in, and I do think that New Zealand will actually go over this heavy resistance here. Also the same applies to Australia. If I just go into the Australian dollar, Australian New Zealand, these are actually my favorite currencies. If you see now, not New Zealand, Australia has been battling here with a 0.74. I think this is basically the turning point. Look, all the fundamentals do play in actually for New Zealand and Australia. Both of them are basically moving the same, highly dependent on China. And if the world is very stimulatory, which is now, these currencies normally goes up in good economic growth. And I do expect that the Australian dollar has also the legs to go over this stiff resistance here of the 0.78. Although it appears a bit that part here in May, I think personally it has the potential to go to 0.8. That is what I think, and it can maybe go higher because the Federal Reserve is not in the mood to lift up the interest rates. People's Bank of China said they're going to stimulate the economy, and I do think that Australia have the leg. There's also other factors that come in Australia. The central bank is also going on a hawkish mode where they cut down on stimulus. There's also the job market that is very solid in Australia. It's actually better than where it was during the pandemic or pre-pandemic. It's at 4.9, and I do think the Australian dollar do have the legs to go over it. I'm not saying it's going to happen today. I'm not saying it's going to happen on Monday or Tuesday, but I think as a fundamental trader, it's good to know that you can open up the trade and leave it the hell alone, because that's exactly what I'm thinking of. All depend on what the news is today with the United States retail sales. After that, I will make my decision. But these two, the Australian dollar and New Zealand dollar, for me, is actually hot property for me. And I think you must also yourself take that opportunity. Just my opinion, but I think that the opportunity is there for the taking. And I do think that those two currencies for me is the ones that will do well. So that is it from my side on this Friday. I hope you guys enjoyed today's show. Please don't forget to subscribe or even ask your questions, and I will actually try my absolute best to answer them. That's it from my side. Have a lovely weekend, and then I will see you guys on Monday at the same time at 1 o'clock. Bye-bye.